Surveillance on Bloomberg Radio, on Bloomberg Television. I'm Lisa Bromwich, Tom Keene, Jonathan Farrow off today. Kaylee Lines very much in ahead of her wedding. Tom, I'm looking ahead and I'm thinking that probably Alberto Gallo has said the quote of the morning so far, that we have gotten peak Delta fear. And if that is the case, perhaps we are in for an upside kind of swing to what has been sort of a pause in the rally. And that, to me, is the tone this morning, Tom.
And from Michael McKee, leading our Jackson Hole coverage, things have changed, Lisa, in the last 3 or 4 days. And I would suggest even on a global basis, yes, there's Afghanistan. We'll do a touch on that in this hour. But, Lisa, the Delta variant has changed all. Yeah,
well, it has changed us into expecting the pandemic to end perhaps a little bit later than expected. And more than that, really to start looking at Lambda and whatever else might follow. But it really raises a question, Tom, if we put too much stock in the idea that September will bring the better labor market data than we'd expected, and are we going to push it out to October, to November, allowing the Fed to kind of remain pat?
Well, we'll see. You know, I don't know. I think there's so much uncertainty here. I'm really hesitant to commit, and I see that in the research notes. I mean, Kaylee, what do you see in the research notes? I see adjustment in GDP down.
Well, we've seen that certainly at Goldman Sachs, Tom, but you're seeing adjustments to the upside for equity calls. We've seen Goldman Sachs do it. We've seen John Stoltzfus over at Oppenheimer do it, all within the past several weeks, even with Delta variant concerns out there, because take away the growth equation, corporate earnings, that seems to be what it's all about and what continues to drive the equity market higher. And yes, you have the liquidity factor in there as well. But it seems like those are kind of two different stories where the growth picture is not looking as great, but yet the equity bulls are just getting even more bullish.
But I wonder, Kaylee, if this really is all contingent on yields remaining low. If basically this is the story, that basically the economic downgrades allow equity upgrades because rates don't change. I mean, how much is that a sort of the predicated assumption in a lot of the equity calls?
Yeah, well, I don't think any of us thought we'd still be at a sub 130 10-year at this point with all of the growth we have seen, with the Fed taper on the horizon potentially in the coming months. The bond market, I think, has confounded everyone. And yes, Lisa, to your point, it's just a question of how long yields can stay this low.
Well, framing the bond market, I think, is important here. 127 on 10-year yield, 112 the low, and up about a 150 is where we were. We're sort of mid-rangey right now, but certainly higher yields this morning. The 30-year bond, 1.89%. Critically, the real yield is a lesser negative statistic, a negative 1.00. Right now, futures up 14, Dow futures up 147, and the VIX 18.62 with fractional dollar weakness. Lisa, it's a time to recalibrate and sort of BNP Paribas with all that they've done, a more cautious view of the economy. They recalibrate this morning.
They recalibrate and they take a look at rates on a global scale. And frankly, that is the only way that we can look at them based on the fact you get a lot of international buyers in the U.S. market. And the differential dictates a lot more than perhaps the absolute policy. Shahid Lada looks at all of it. Shahid Lada of BNP Paribas, head of G10 rates strategy for the Americas. And Shahid, how closely are you watching the Zoom confab, the Jackson Hole virtual event on Thursday on Friday, where we get a sense of what tapering really means to them and how near it is?
Sure. So thank you. Indeed, we're watching it very, very closely. The Fed, I think, has managed another hawkish turn amid a lot of dovish noise. What I mean by that is the central case that comes out of the July FOMC minutes is now the start of taper this year, which presumably would be an announcement in September or November. But at the same time, a lot of dovish cushioning around the Delta virus, the Delta variant. And so there remains a lot of uncertainty. And I think Jackson Hole offers us the best or earliest opportunity for more information. The minutes are nearly a month old by then. So either we'll have some dovish or hawkish sentiment that can bring, even September into a live state regarding taper.
Well, if we get more information come this Friday, if we get an actual announcement of tapering in September, what is then the resulting market reaction? Do we get a tantrum?
So this is somewhere where we've had a strong view for a long time. And no, we don't expect a tantrum. And this is despite the risk of this earlier yet slower taper pace that I think the Fed's put out there. September remains too early for us, and something too substantial remains unlikely for us at Jackson Hole. But of course, as I've said, meetings are now live and it's indeed possible. But we don't expect a tantrum. We expect a tantrum-less taper. And the reason for that is threefold. The first is this is well flagged, the different crisis, the economy is in a different place. We've almost reached exit velocity very, very quickly compared to 2000 and the GFC. And the second important point is the deficit will fall next year. So any reduction in Fed buying will almost be offset, if not more than offset, by a shrinkage of Treasury issuance. The final point is the Fed's introduced a bunch of liquidity facilities, which also help to effectively cushion the blow of them leaving the market as the biggest buyers right now.
Shahid, I got to say, I feel sometimes a little misguided when we talk about tapering and we put this emphasis on how that's tightening in policy when they're still buying tens of billions of dollars of bonds every month, adding to a balance sheet that is at a record $8.3 trillion and expected to continue to expand possibly by another trillion over the next 12 months, even with tapering. I mean, given this accommodation, how big of a balance sheet do you expect from the Federal Reserve, and what is that actually doing in the market right now?
Sure. So I think you've hit the nail on the head. Taper is still QE. It's not QT. And therefore, the balance sheet is still expanding. And to that end, we expect the balance sheet above 9 trillion or close to 9 trillion this year. And obviously, 9.5 and potentially higher next year. So what it's doing is keeping financial conditions as accommodative, almost as they've ever been. You highlighted earlier that stocks are close to their all-time highs despite the recent wobble. And I think that's also reflected or as a result of close to the lowest level of real yields and credit spreads we've ever seen.
Yeah. How do you factor supply and the potential reduction thereof later on this fall when thinking about that story, combining it also with Fed tapering?
Sure. It almost helps to offset the story here, offset any risk of the market being concerned. So we've substantiated that taper in itself is not a negative QE or liquidity event in terms of its outright, but in terms of its delta, the size of the pace of increase is obviously moderating with a view to stop, let's say, by the end of Q3 next year at the latest. So to that end, it's really how does the market take this? It's the fear of the Fed leaving the market, which is what we saw in 2013, which is, I guess, what we're all scared about, including the Fed, a tantrum. We don't think we get that this time. We haven't had much whiff of that so far. In markets, we see where real and nominal yields are. And an important part of that is the deficit should fall by nearly a half, from 3 trillion to 1.5 next year. Bond supply will fall materially next year, and therefore it should cushion the blow to less Fed buying.
Well, but Shahid, what I'm hearing from you is interest rates could remain where they are, even with Fed tapering, right? I mean, that basically what it seems to be to me is that 10-year yields could remain where they are, even if the Fed pulls away from buying bonds.
Look, I think that yields indeed, it's fair to think about yields not reaching as high levels as we perhaps previously thought they would, or in that space of time. Part of that is also related to the debt ceiling, which is now adding more and more liquidity into the market over the summer. This was supposed to be resolved by July with more bill issuance and basically less liquidity in the market. That's not been the case as the Treasury runs down its cash. So in other words, fixed income could stay squeezed further through the summer and keep what yields at what we think are somewhat artificially low levels. We look for a range of about 125 to 150 for the summer, once the debt ceiling is hopefully resolved in the early fall and the Fed announces taper. We think those factors can take us higher, but gradually higher. We think we can get to 170 and above later this year.
Wow.
But it will take some time to play out, we think.
Shahid Lada of BNP Paribas, thank you so much for being with us. Tom, what is the trajectory of a 1.7% 10-year this year? I mean, what would that do to, for example, Apple?
I think the answer's a lot. At least I think this is way underplayed. It's nonlinear. It'll be fine and measured, and then at one point it won't be fine. It won't be measured. But I would go, and I'm a disciple of this. It's Stanley Fischer, and it's the percentage move. You take that move of 30, 40 basis points, and you divide it by where we are right now, and it's a huge percentage change move to go from 127 up to 1.70.
And didn't Mr. Wilson really show the correlation of big tech and rates, and just it's basically neck and neck?
Yeah, well, I'll go with big tech on that, and that's discounting their huge growth. But I'm just saying the percentage move in interest rates is something I respect greatly.
Yeah. Meanwhile, we're looking at a market that does have a lift. It is a buy the dip kind of market. A dip evidently counts as 0.6% drawdown, as we've been saying, of S&P. Coming up later in the hour, we've got Peter Trubowitz of the London School of Economics, an international relations professor. That conversation coming up next. This is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, Lisa Cayley, tropical depression Henri appears to be lingering in the Northeast, raising the prospect it will bring sustained rains and cause major flooding inland. Bloomberg's meteorologist Rob Carolyn has the latest.
Michael, even though the steady rain ended overnight, it comes back. We've got Henri stalled out to our north. It starts to shift back to the east today. The rain that's now in New Jersey, eastern Pennsylvania, that's going to slide back over the top of us. And there could be locally heavy downpours. That's why the tri-state area is under a flood watch. Later today, the rain will taper off and end. That's probably going to happen during the early and mid-afternoon hours as what's left of Henri heads off towards eastern New England. Michael?
Thanks, Rob. Crews are expected to resume recovery efforts today after at least 21 people died from catastrophic flooding over the weekend in Tennessee. And officials say dozens of more potential victims are missing. The flooding swept through Waverly, west of Nashville. President Joe Biden says the U.S.-led evacuation of Americans at-risk Afghans and others from Kabul has accelerated, but he is not ruling out extending it beyond the August 31st deadline that he set prior to the Taliban's stunning takeover of the country.
We have moved thousands of people each day via U.S. military aircraft and civilian charter flights. In a little over 30 hours this weekend, we've evacuated an extraordinary number of people.
Speaking from the White House, Biden said no Afghans are being flown directly to the United States without prior screening. The White House official says since August 14th, the U.S. has evacuated and facilitated the evacuation of approximately 37,000 people. Vice President Kamala Harris returns from her Asia trip to the Bay Area this week to campaign with California Governor Gavin Newsom in next month's recall election. Civil rights activist and one-time presidential candidate Jesse Jackson and his wife are said to be resting comfortably in a Chicago hospital after contracting COVID-19. Jackson's son says his 79-year-old dad is fully vaccinated, but his mom is not. Live from the Bloomberg Interactive Brokers Studios, this is Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barnes. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, shares how we help you consider everything.
In today's ever-evolving environment, the team at Pershing's Prime Services wants to know, what are you focused on now? Are you confident in the stability of your counterparty? Do you feel they can help you grow your business? When it comes to fundraising, do you have access to the mindset of the advisor or have what you need to navigate the ODD process? Exceptional service for our clients is at the core of what we do. Our award-winning team is just one of the benefits of working with BNY Mellon. Whether it's customized financing or securities lending solutions, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your demands, so you can focus on growing your business and producing results for your clients.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
I was in the middle of the Atlantic Ocean when it happened. There was a sudden jolt and our submarine crashed on the seafloor. We were in total darkness.
That's Dr. Dejana Figueroa, a marine biologist and STEM teacher, talking about a deep sea dive she'll never forget.
It's funny, when I was a kid, I was afraid of the ocean, and there I was, 2 miles below the surface. But as a scientist, you prepare for that. Using our training and a little creativity, we fixed the sub and finished our experiments. The dive was just too important. Every dive gives us glimpses at things few people ever get to see. Glowing creatures, fiery undersea volcanoes. When we got back to the surface, I kissed the ground and called my mom, of course. But you know what? I wouldn't trade that dive for anything.
Dr. Figueroa uses her passion for STEM to discover new things and make the world a better place. She can STEM, so can you. Check out She Can STEM for more stories and inspiration. A message from the Ad Council.
Influential conversations from Bloomberg Television. Here's Francine Lacroix.
Oil is heading for a weekly loss, hurt by the Fed's move towards tapering and concern about energy demand. But rig operator Maersk Drilling is optimistic about the market's recovery. Now, the firm has beat estimates for the first half of 2021 after raising its full-year outlook yesterday. Well, joining us now is Jørn Madsen, Maersk Drilling Chief Executive Officer. Mr. Madsen, thank you for joining us right here on the European Market Open. When you look at some of the dynamics in the markets today, they worry about the Delta variant, they worry about growth prospects, and I'm sure you worry what that means for oil demand. Do you see it getting worse from here?
Yeah, COVID is, of course, an element to take into perspective when we look at the future. But so far, I mean, we've had 1.5 years now where we've been able to deal fairly well with the operational challenges that it has posed to us, and there will be challenges going forward. We do see that the markets are in recovery. That goes for the markets that we're in. So after having delivered our results for the first quarter of the year, we also believe that the last quarter or the first half of the year, we also believe that the next half year is going to show that we are on a emerging recovery.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings.
Fed is clearly, it's sometime in the next month, 2 months, 3 months, 4 months, going to start the process of tapering. Whenever that happens, that's less money coming into the market, and money will leave the stock market and go into the expanding economic circumstances.
Dennis Gartman with some thoughts there. I believe that was on Friday, of course, with managing money for the University of Akron, their endowment fund, and, of course, the Gartman letter as well. Lisa Bramlett and Tom Keene with Kaylee Lyons in for John Farrell this morning. And right now we digress. We look at Bitcoin at 50,000. I'm looking for it on the screen, Lisa. My eyes are glazing over. 15,348, up 4%. Always then a good time to talk to Edward Vanderwalt about Bitcoin. Eddie, if I do a log chart of Bitcoin and I regress it back, it's actually a very elegant chart. It's very trending in a very, very lovely way. And it says $100,000 per coin, spring of 2023. Why won't that happen?
Yeah. Absolutely. I mean, it's a beautiful chart that just shows how parabolic the rise of Bitcoin has been. But past performance, no guarantee of future performance, right? Bitcoin is in a really interesting space at the moment. We are seeing the broader financial markets just getting interested, and this time around it's different, right? Because last time, 2017, when we had Bitcoin rally, we saw the collapse. It went down 80% and then did nothing for about 2 or 3 years. And really what brought it back was a change on the supply side. But this time the demand side seems to be, just a little bit more stable. And Bitcoin demand just hasn't gone away this time around. And I think that's a really interesting change. I think the broader financial community wants to get in here.
The mining of Bitcoin through electricity in China is under siege, do guys like you, experts like you, just assume that migrates geographically someplace else?
I think it's already started migrating, and a lot of it's coming to the US, to be honest with you. We've seen that. But the hash rate, the rate at which Bitcoin is mined, the computing power that's dedicated to mining Bitcoin has fallen, and that's definitely true, and it's not recovered to those, to the sort of China high era. But that almost doesn't matter, because algorithmically we're going to create the same amount of Bitcoin no matter what, right? Because that's just the way it is. As long as there are some miners out there, the production rate of Bitcoin remains stable. So this makes it very different from your normal, mining activities.
All right, so Eddie, this is kind of maybe a basic question, but why is it up so much right now?
No, that's a good question.
There's a number of reasons. Look, I think the reason for the turnaround in Bitcoin is always hard to guess. But I think one of the reasons for the turnaround over this weekend is that we saw PayPal saying that they're going to launch a similar service to what they have in the US, where in the UK customers can buy on their platform Bitcoin. And the more access points you give, customers to Bitcoin, I think that helps bringing new buyers into the market. Yeah. But more importantly, there is talk of a US ETF. We haven't seen one yet, but the US regulators are growing a little bit more welcoming towards a cash-settled, futures-backed ETC, and I think that will be very important for Bitcoin. That could be a game changer.
Eddie, we've been talking about a potential Bitcoin ETF for years now, and it still hasn't come to fruition. It's still very much a question mark. And let's face it, Bitcoin doesn't often trade on that much fundamental. A lot of it is technical. So above the $50,000 level, where do the technicals suggest it could go?
Look, you're right. I mean, Bitcoin trades on excitement. Bitcoin goes up when the animal spirits are behind it, and when people are talking about it, when it gets airtime on television, when it gets column inches in the papers. That's when Bitcoin goes up, because more people hear about it, and that pushes up the price. It's hard to see, anything standing in Bitcoin's way now that it's above 50,000. It's very hard to pick a price, but tests up at the record highs at 60,000, it's plausible.
There's obviously people that invest in crypto because it's an asset that just has climbed historically, continues to climb to levels that few people, I think, understand. But then there's also people who think this is actually going to eventually replace fiat currencies. And I'm wondering I don't know if the digital dollar is going to be a subject of discussion at the virtual Jackson Hole, but if that conversation accelerates, does that kind of make the case for a deteriorating Bitcoin case?
Yeah, I think that's still a very hard case to make, right? I mean, Bitcoin's still nowhere near replacing the dollar. It's not really making inroads in the real payment economy. There are places that you can pay with Bitcoin, but few people choose to do so. But Bitcoin's still purely speculative asset. What's more interesting is what's happening in the Ethereum space and some of the other cryptocurrencies where we're seeing, real innovation happening.
Eddie, let me go back to first principles. The game of this is there'll be 21 million Bitcoins. Right now, there's 18 million plus. I really don't know what the number is, folks. It's Monday. I'm making it up. Eddie, what happens when we get to 21 million Bitcoins mined?
Yeah, it's a long way in the future, Tom. But I think when we do get there, so what we're seeing in other cryptocurrencies. We're seeing that they move away from algorithmic mining principle, and that at that point it becomes about proof of stake. This is what Ethereum is doing at this point, and this is what the Bitcoin people are saying they are going to do at that point. But we're a long way off because the rate of production slows in Bitcoin. So we're not talking about this happening in any time in the foreseeable future.
Eddie, I guess thank you. I think really? Lisa nailed it. Like, why is it going up?
Eddie
Vanderwall, thank you so much. Always just brilliant here. He said proof of stake, and I'm like, I looked at dry-aged steak at Whole Foods this weekend.
Yeah.
And it was like $4 million a pound.
Literally every time I walk in, I hear your voice saying, whole paycheck. I'm going to whole paycheck. That definitely is how it feels.
I migrated right to the hamburger. The big decision was 15% or 20% fat.
Oh, yeah? Who won, 20% or 15%?
I can't remember. I didn't make that executive decision.
I have a sense of who is lined up on either side of that debate. Look, honestly, when we talk about crypto assets, it was interesting that Eddie was talking about the regulatory impulse and how actually more regulatory guidance would be positive for the crypto asset. But how do you regulate Dogecoin? I mean, I'm telling you this because my kids use that in Roblox. My kids are more knowledgeable about Dogecoin than I will ever be. And if something is created as a joke and has rallied however many million %, what do we make of that, Tom?
Kaylee, are you involved in this? I mean,
I am a passive bystander, an avid passive bystander. I haven't found my entry point, Tom. I know you're still looking for yours.
I mean, can you just see her, the wedding list thing you make up, Scully and all that? Kaylee's got the Doge on there.
Yeah.
Oh, yeah.
Yeah, you can give 100%. her wedding gift. She accepts Doge. She accepts Bitcoin. Yeah, please.
Yep.
You're
Let's do a data check. Farrell would be doing a data check by now.
Yeah, she
Let's
would.
do a
Let's
data check. Say ourselves. Futures up 16. Dow futures up 167. The VIX comes in just as I predicted, a little bit. Teen swings. 18.48. Yields are in 1.26% in the 10-year. That's a low yield for this session of Bloomberg Surveillance. We've got currency weaker. Markets actually moving. Euro 117.24. Please stay with us. Kaylee Lines, Lisa Bramowitz, Tom King, good morning.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
NJIT makes innovation happen. It also makes entrepreneurs like Anya O'Dwyer. Founder of Innovate, a tech-driven civil engineering and construction management firm, Anya says NJIT is defining the future.
NJIT is extremely important as a hub of disciplines all in one space with all of these brilliant minds. NJIT's role is huge when it comes to defining the future and how, from an interdisciplinary point of view, they have it all there, whether it's the innovation hub, the maker space. NJIT is already creating that collaboration.